May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the Euro USD. The Euro USD. We're going to start at the monthly time frame. We're going to work our way down. All right. What do we see? Just like the US dollar index is in an ascending uh, uh, channel, this is in a descending channel. All right. And we are making the lows, making the highs, and making the lower lows, lower highs. All we need to know is if this resistance side of the channel, the resistance line of the channel, is going to hold to bring price back down for a lower low. That's what we want to know. And the only way we're going to find that out is through the signatures of price. Let's take a closer look at this area here, where price has come back into contact with it. Now, I did a close up on the US dollar index and I showed you how price became very bearish once it came into contact with the other side, with the support line with the US dollar index. Over here, it's the resistance line. And you can see how price pushed hard from uh, that resistance line. But we did not take the low of the previous candle. All right. Let me show you what the Dixie. We did push hard, but the high and the low of June's candle were taken by a bullish engulfer. We don't see the same situation or the mirror image side in the Euro USD. It did not take that low. It did sweep the high, but it did not take that low. Doesn't mean it won't take the low. It just means that we had a slight bit of divergence there. And what I'm looking for is this candle here. All right, the new August candle. It's only a couple of days old, but what I want you to note is that there's hardly any wick. There's some wick. There's a little baby wick, but because price pushed up, I'm thinking that if we go to the midpoint of this, the trading range of this candle, and if it respects that midpoint and maybe turns around, finds resistance right around the 50%, right around the 618 uh, Fibonacci retracement, then it may continue down. All right. That's what I'm looking for. All right. What we have to find out is what's in this candle on the lower time frames that will allow us to see structure that supports lower prices. Let's go down to the weekly. And in the weekly, what we see at the resistance line of this descending channel is we had a bullish fair value gap. So a legitimate one because the next candle, the closing candle, closed above the high of the previous candle. So you had a reasonable expectation that price would continue higher from it. However, that's not what happened. What had happened was price pushed down into the fair value gap, started to pull up, and we were like, oh, okay, it closed above. That means we should be seeing some daylight. No, the news came and NFP. It was quite a week of new fundamental news. We had FOMC, the Fed holding rates, and then the NFP came back with weak job numbers that caused the U.S. dollar to gain some strength. All right. Well, actually, the NFP caused the U.S. dollar to lose strength. All right. It became weaker, which is why you see this pullback here. The FOMC brought the candle down, but the NFP brought that candle back up, and this is how the week closed. Make note that the week closed below the low of the previous week. Using next candle theory, we should be seeing price try and fill this wick with this next couple of candles. All right. Also, something I want you to make note of: price has already pushed down and retraced in this one candle. This is the retracement. That's at the 50% mark of this trading range, the trading range of this candle. This is where you want to see price find that supply, find that resistance for lower prices. All right. And we have to, the only way we're going to see that is in the lower time frames. Let's take a look. On the daily, what you can see is here's that disrespected fair value gap, which looks like it inverted here, right? Boom. But we don't need that. We don't need to see that. Why? Because we have a very bearish fair value gap right here on the daily, and prices running right up to it. This is the buy before the sell, and this is our CISD, our order block, our change in the state of delivery. Prices retrace back into the fair value gap, which is the beginning of this area of fair value. Okay. Also, we have a market structure shift right here at the bottom, at the low of that candle. So, ideally, we should be seeing price turnover inside of this fair value gap, much like the opposite we are expecting with the US dollar index. Now, I also want to point out too, if we put our Fibonacci retracement at the high and the low of this trading range, and you can see the 618 crosses very nicely within this fair value gap. All right. We have the 705, everything that these levels, the 705 and the 786, all of these levels are where we're looking for price to give us the signature that it wants to come back down lower. We're going to look for a market structure shift within this fair value gap. Okay. All right. Now, suppose the fair value gap fails. Suppose there's too much uh, uh, momentum going up into this candle, and it just decides it's going to go up. Well, the price does what it wants to do. But what I want to point out is, all right, we have a push down, a pull up, and it did not take that high. This is a swing fail. Then we have another push down. This forms a mitigation block. All right. And price comes back to that mitigation block. This mitigation block should hold. Should. All right. The probabilities are that I believe it should hold. We took out this, we traded past that market structure shift there, and we rated the liquidity below that low. And we have a quick turnaround. I'm looking for price to find that resistance for lower prices. I hope you enjoyed this video. Hit the like button, hit that boost button, and if you want to leave a comment or ask a question, or maybe you want to see a particular asset analyzed, just let me know. All right, I will see you in the next video, and thank you for watching. Look for my next one, which will be the pound USD.